Much of what I'm going to say has to do with Africa. But one thing which we have learned over the last couple of years, and especially the last few months, is that even so-called developed countries like Greece can be subjected to very, very humiliating conditions which were previously thought to be reserved for developing countries. And very, very importantly, although the world economy has been slowing down for now about 7 years or so, and especially for Africa, I think what has happened over the last year is going to be very decisive. There is still this very fundamental misconceptions about how to resolve problems. And the biggest, most important thing is to decodify language which is used. So when Europeans and others talk about structural reforms, the main thing to know that these structural reforms are basically reforms to so-called make the labor market much more flexible and to ensure that organizations, particularly trade unions, which are there, which supposedly impede the flexibilization of the labor market, are considered to be the enemy. So this, what is being discussed, is something which is, I will talk mainly about Africa, but remember this is a global phenomenon. Because I have some friends in the Italian trade union movement because I live in Rome right now, and they too have been telling me how the leader of the party which they belong to is now actively trying to weaken the labor movement in Italy. Okay, so you can see the enemies are not just from outside, they're sometimes even your supposed comrades. Okay, this is very, very important for us to recognize. This is a very new world in some ways, and a world which is more familiar in other ways. So let me try to move very quickly through these slides to try to understand this phenomena, and particularly to understand the relationship between what is called globalization and particularly economic growth or development and poverty which continues. Now, the presentation is going to be organized along the lines of the themes which I put on the screen, and I'll move on very quickly to pointing out what happened in the 20th century. This chart basically shows you how primary commodity prices, okay? Primary commodities refer to two different things. One are agricultural commodities, and of course Ghana is well known as a producer, long-time producer and exporter of cocoa. But also very importantly, Ghana was historically famous for being the Gold Coast, and because it was a major source of gold. And gold is a mineral, just like many other minerals, and there are minerals which previously had no value or little value and now have become extremely important, what are called rare earths, for example, which are very, very important for producing many of the modern electronic products. So the trend has been very clear that mineral prices have tended to go up recently much, much more than agricultural commodity prices. And part of the reason agricultural commodity prices generally do not go up very much compared to mineral prices is because there is very little so-called scarcity value. Okay? The individual farmers who produce cocoa, for example, they have very little bargaining power in big markets. And likewise with, say, rubber from my country or palm oil and so on and so forth. There's very little bargaining power for the individual. So this is why companies all over the world producing industrial products and sometimes even services try to have some type of monopoly power. And so this is why the so-called intellectual property rights becomes very important. If you can have a monopoly power by owning exclusive rights to any particular technical innovation, you have the chance of making more money. Okay? So this is something to recognize, that although there's a lot of rhetoric about competition and so on, when it comes to companies' interests, it comes to corporate interests, they are always striving to have a monopolistic position. And this is consistent with what the business school gurus, there's a man named Michael Porter at Harvard Business School, for example, who talks about competitive advantage. And one major form of competitive advantage is by having monopoly power. Okay? Monopoly power can come in different forms. And through this, economists sometimes use the word rents. Rents comes from this kind of exclusive power. Let me move on very quickly with some of the other slides in this regard. Now, Africa's terms of trade generally have fallen, perhaps worse than many other developing countries. Productivity in Africa generally did not rise as much as in some other parts of the world. And the result of this is been a weakening of incomes in Africa. Sub-Saharan Africa, basically lost as a whole. Okay? There are, of course, many exceptions all over the world to what I'm going to say, including in Ghana. But generally speaking, Sub-Saharan Africa lost a quarter of a century from the late 1970s, when commodity prices began to fall, until the beginning of this century. For a quarter of a century, Sub-Saharan Africa basically experienced terms of trade fall. Okay? Terms of trade is basically the prices at which you exchange, you trade, and is the relative prices of, in this case, primary commodities, mainly agricultural commodities, but also minerals, and manufactured goods which you may import. I'm not saying that manufactured goods prices have not come down. If you think, for example, of the impact of China and Chinese production, or even Bangladeshi production, they have been, or increasingly Indian production and so on. Prices of manufactured goods have come down. But generally speaking, you will see certain trends which I will try to describe very, very quickly to you later. So if you look further, you will see that the terms of trade for Africa have been hit quite badly. And I can bet that nobody will be able to explain it without explaining political decisions. So politics is very much part of prices. Okay? Don't think that prices are impersonal and have nothing to do with politics and so on. This happened in 1972-73. Food prices went down. Food prices went up, oil prices went up, and so on and so forth. Again in 78-79. And that was what triggered the period of slowing of the African economies. Now, if you look further, you will see that the share of trade of Africa has declined compared to many other countries. But there has been a very important change in the pattern of trade of Africa. And you will find that Nkrumah's dream, although it has never been fully realized, it has changed in things have changed in some important ways. Africa is trading much more with itself than was previously the case. Okay? Now, of course, some of this is misleading because you have goods coming to certain countries and then being re-exported to other African countries and so on. But there has been an increase of intra-African trade, number one. And the second point, I think, which needs to be made here is that there has been also a change with much more South-South trade. China, which is everybody knows about, but India, the trade with India has also changed a great deal. And some of this has been very beneficial. Until India signed up, stopped exporting, for example, cheap pharmaceutical drugs because of the agreement under the WTO. you could get relatively cheaper drugs from India than by importing them from the West. This was very, very important in terms of reducing the cost of living for people, especially for poor countries. So if you look at this, you will find that about half a century after many countries got independence, by the way, Ghana and Malaysia got independence in the same year. Ghana a few months before Malaysia in 1957. But if you look at this, you will see that almost 80% of African exports are really from what are called primary commodities. Okay, now, but particularly in the last 10, 15 years, there has been a huge increase in the exports of minerals. Not only in terms because of the price increase of minerals compared to other things, but also because there has been a huge export increase in mining activity. And it's very important to remember that the fact that there has been much more mineral exports doesn't mean Africans are getting better off. There is a country, Tanzania, which is now the third largest producer and exporter of gold in Africa. South Africa is number 1, Ghana is number 2, and number 3 is Tanzania. Guess how much the government of Tanzania gets from the bigger production and export of gold? Does anybody know? 5%. What did you say? 5%. 5%. Anybody else? Well, the answer, unfortunately, our friend was wrong. The answer is negative. Why? Because the Tanzanian government subsidizes gold mining by big foreign companies in Tanzania. Okay? So you will find, for example, the World Bank talks a great deal about improving transparency to minimize corruption by African elites and so on and so forth. But they never say anything about the subsidies by the host country governments, and this is not even taking into account the environmental and other costs, okay? Just in terms of what the government does. Number 1, it doesn't tax. Number 2, it actually produces infrastructure, builds infrastructure to enable the mining companies to operate, okay? So this is what is happening, okay? All in the name of eliminating corruption. Now, I'm not for corruption, but I think you have to get your priorities correct. And this is what is happening. So just because there is a huge increase in mineral production and export doesn't mean that Tanzania is better off from becoming number 3 in terms of gold production and export. Now, if you look at what is called export concentration, the exports of Africa, you will find there's a very high concentration. Many countries are dependent just on 1, 2, at the most 3 major exports. So it could be gold, it could be cocoa, it could be something else. But whatever it is, at the end of the day, very, very high concentration. So if anything goes wrong with any part, it really fundamentally affects economy. Now, if you look at how the commentators have used to criticize Cuba. Cuba at one point depended very heavily on producing and exporting sugar, okay? And I think it was a mistaken because it was, what you call a monoculture. Now it has diversified very considerably. But the big criticism of Cuba was for promoting what was called a monoculture. But this has been encouraged and produced since colonial times and continued in post-colonial times under the guise of what is called specialization. You have to find where your comparative advantage is greatest. This is the mantra. And you produce that, okay? And this is exactly what has happened. And the result is that African exports have hardly been diversified. Now, since about 3.5 decades ago, since the early 1980s, there has been a great deal of what is called trade liberalization in Africa. What have been the gains for sub-Saharan Africa? Unfortunately, this is another trick question, okay? I've already put the answer there, so I won't ask you the question. But basically, there are a small handful of countries in the world, some developed countries like Canada, Australia, and so on and so forth, and some countries like my own country, Malaysia, and some other Southeast Asian countries who have benefited a great deal from trade liberalization because some of the barriers to entry have been reduced. But for the rest of the world, they have really benefited very little. Okay. The next few charts are basically about what are called debt flows, okay? So when you borrow, it looks pretty good. You need an initial injection of money, you borrow the money, and then you have to start making the payments. And so part of the reason I said I qualified ODA flows is because, for example, if you look at the DRC some years ago, the actual money coming in to the DRC from aid after deducting the payments was actually about 10% of the gross flows. Okay, so don't think that aid doesn't have its costs. Okay, when you look at the gross and the net flows, the differences are quite considerable. Okay, these are all about the ESAF, and I'm basically arguing here that the ESAF has been basically anti-growth in Africa. Okay. You remember Tony Blair? One of the things Tony Blair told, he commissioned this report which I think he asked Nick Stern to write on Africa, and the report is quite an interesting report. But basically, after that, he made a commitment about how much he was going to increase aid to Africa. Now, that was before something called Glen Eagles, okay? The G8 meeting at Glen Eagles. Recently, we looked, and in fact, the promises were not realized, okay? The point I want to make here is that this is actually a bar, okay? You might not see it, okay? It's 26 billion, ODA to Africa in 2008. It's 26 billion. Okay, what is this? This is almost 20 trillion. Okay, this was what was mobilized by the G20 countries, the 20 biggest economies in the world, when in 2009, in response to the global economic slowdown. The point I'm trying to make is that when there is a political will, you can raise money. Okay? 20 trillion compared to 26 billion. Okay? That is basically the cup. It shows you how much of a priority you can expect to be. Okay? So it basically is about what? If you think about the ratio, it is less than 1%, yeah? It's less than 1%. Now, I've already made this point about net aid transfers being lower. And by the way, after the Cold War, aid flows to Africa went down, okay? And then they went up after 9/11. And since 2008, except in the case of the UK, they have gone down again. Okay? This is for the world as a whole. So the World Council of Churches argued for 2% transfers to developing countries as a whole way back in the early 1960s. It was accepted by the UN in 1969. The target was 0.7%, 0.7 of 1%. It has never been in excess of half of that, of 0.35. And the current figure is about 0.29, if I'm not mistaken. Okay, this basically gives you an idea that remittances dropped after the economic crisis of 2008. In fact, if you look here, it was people in Africa who were helping out their relatives in the West. Okay? Okay, this is the Berg report I mentioned earlier. Okay, the result of all this, the Berg report and all the structural adjustment and so on, is that African capacity and the government's capacity to play a developmental role has been undermined. I'm not saying that governments necessarily want to play a developmental role, but even if they wanted to, they find it very difficult. And this is important to take into consideration. The structure adjustment programs imposed in Africa have basically slowed it down. This was very much uncontested until the last chief economist of the World Bank, a guy named Shanta Devarajan, claimed this argument, which many people thought had been rejected, has actually come back. Okay? And because he was the chief economist of the World Bank, it will have some currency and it will last. Although nobody actually, although there's no empirical evidence for it. Okay, this basically shows you that the region of the world which did worst of all during this last period has been sub-Saharan Africa. Although between 2004 and 2013, Sub-Saharan Africa was the second fastest growing region in the world, next to East Asia. So, you know, it did pick up, much of it due to mineral growth. Okay? This is basically looking at it before 2009, but it continued after 2009. Okay? To get a sense of per capita decline. Okay, I won't get into the question of volatility because it's a bit difficult to get into right now. Okay, this is worth dwelling a little bit on. I'm pretty much going to finish. Basically, from the beginning of the century, Sub-Saharan Africa has been growing at over 5% per annum. And the growth rate did not fall until below 5% until 2009, but then it improved again after that. And the main reason was demand from Asia. Okay, and the trend for now. We are now in a period which the West politely calls a period of secular stagnation. Okay, and this basically means that this period of slow economic growth is going to continue. So the possibility of external demand is going to decline. The West, particularly the US, has also put a lot of pressure to slow down Chinese growth. So they have been pushing a lot for the Chinese currency to go up. And it has gone up. It has gone up by over 40% since 2008. But China still runs a trade surplus. Now, China now has done what some of us were advocating before, which is to make much more resources available through various means for development in other countries. So the three main developments are a huge infusion of money into the African Development Bank, the setting up of something called the Asian Infrastructure Investment Bank, and thirdly, something called the New Development Bank, which has been created by the BRICS. So what we see is there has been some improvement in the living standards coming from this growth in parts of Africa. And I think it's important to remember, however, that Africa, generally speaking, has not been doing well as far as the Millennium Development Goals is concerned. So poverty rate, you can see, has hardly changed in sub-Saharan Africa. The rise in African poverty, the number of poor people has actually gone up. Poverty rate has gone down in almost the entire world, and according to my previous estimates, using World Bank data also, Sub-Saharan Africa was the only exception. But as I said, Salah Martin now claims that those numbers were wrong. Okay. Now, this push towards casualization of labor is universal, but has been very, very strong in Africa. In my own country, which has had a large wage labor force, we find that less than 10% of the total labor force is actually unionized. And now there has been a decline of the rate of unionization, and most of the workers who are unionized are actually public sector workers. So as the public sector gets squeezed, this further affects the strength of labor. And the weakness of labor in the private sector basically means that the private sector is more or less getting what it wants. Sub-Saharan African economic contraction has worsened the situation as far as poverty, has huge social consequences, the number of children finishing school, and so on and so forth. I won't get into all these details now. Okay, I have not gone into questions of inequality, but I think it's very important to recognize that inequality in most of sub-Saharan Africa has also continued to increase. Now, sub-Saharan Africa has very, very mixed stories as far as inequality is concerned, and the data is generally very, very poor. And the highest inequalities in general are to be found in the former, they're still settler colonies, okay? So this is largely Southern Africa. If you look, the highest inequality in the world is Namibia, yeah? And even in Latin America, you will find that the areas where the latifundias are large are the areas where you have the highest inequality. That's why Brazil, for example, the last country to end slavery in 1885, is the country with the highest inequality before, and this has only been reversed slightly during the period of the Lula presidency. Okay, this gives you some idea of income inequalities. Okay, these are some of the problems of the developmental state in Africa. I won't have time to elaborate on them now, but I hope during the 3 days here you will have a chance to discuss what would be needed and the possible role of organized labor in relation to the developmental state. These are some of the important questions which I think are important, but I think what I've tried to emphasize is the constraints on development in Africa which are imposed by the phenomenon of the last 3 or 4 decades, which is called globalization. It's not a completely new phenomenon, but the dynamics have changed, and with particular consequences for Africa. Think about the trade, think about the finance, and think about some of the consequences. Recently, there was a conference just last week. Some of you attended that conference in Addis Ababa. Unfortunately, there was nothing of significant consequence which was achieved in that conference, and it was largely due to the OECD countries, the developed countries, refusing to make any concessions on taxation. I've already talked about how developing countries and African countries in particular have very, very weak fiscal capacities. And that limited fiscal capacities basically means they have very little developmental capacities. And those fiscal capacities have been weakened by years and years of submitting to regimes, tax regimes. Now, there is something called the OECD, which is the Organization of the Rich Countries, which has a tax capacity. For the last 15 years, it has focused on one thing, so-called offshore tax havens. Okay? They don't even want to talk on onshore tax havens, so they will talk about islands in the Caribbean and so on and so forth. They will talk a great deal about that, but they won't talk about Delaware, they won't talk about the City of London, they won't talk about onshore tax havens. Okay? But very, very importantly, this is where the elites from Africa and other developing countries are hiding their money. And some of this is now happening in Asia as well. So you have tax havens in places like Singapore, where people are moving away out of Switzerland to places like Singapore to hide their money, or to Mauritius, where you look at the foreign direct investment figures for India. The highest investor in India is Mauritius. It's actually what is called what do you call it? Round tripping. They move their money to Mauritius and then they invest from Mauritius. Just like some of the Chinese elite moves their money to Hong Kong and then invests from Hong Kong. So Hong Kong is a very big foreign investor in China because of this so-called round tripping. And part of it is to avoid taxes, but there are also political and other reasons why all this has happened. So this is a very different world from what we were born into. And it will need us to better understand this world in order to be able to do our work much better. So I hope this was of use to you, and I'll be happy to have a debate and discussion on this session, or perhaps if there's not enough time, over the next 3 days. Thank you very much for this opportunity.